Here's a look at where markets ended the shortened holiday week, and stocks are set to end the year strong. This week, we saw a surprise jump in GDP growth, surging 4.3% in the third quarter, the highest level in 2 years. And it may take off from here. Louis Navello telling Maria he's expecting 5% growth next year. Let's bring in Bullseye American Ingenuity Fund portfolio manager Adam Johnson. And all of these dire predictions about the economy and the markets for 2025, none of it
came true. That's right.
How do you feel going forward?
Well, I agree with Louis Navello, who, by the way, is probably one of the best stock pickers of not just this decade, but the past several. Louis talking about that 5% GDP growth. We're at 4.3, so it's not exactly hard to imagine that. And here's the other thing, Cheryl. We have already had 4 consecutive quarters of double-digit earnings growth. And then we also saw profitability margins accelerate to all-time highs, about 13.5%. Well, I think that the fourth quarter is going to mark a 5th consecutive quarter. And as I look out to 2026, yeah, I'm with Louis. There is so much to like in this economy. It's why I'm fully invested.
Well, look, if you look at consumer spending, the consumer has really propped up the U.S. economy, not necessarily as much as manufacturing as we thought would for 2025. But moving into 2026, as the build out of these AI data centers continues, that is jobs, that is economic growth, small businesses alike in these communities where these data centers are being built out. And then again, the strong stock market has powered that consumer spending for this year. You think that continues into next year?
Well, I think you just made my argument for me.
You're welcome.
Thank you. So, yes, artificial intelligence is the strongest theme, the most powerful investment theme of my career. And I've been doing this a long time. And so I now have a third of the American Ingenuity portfolio committed to AI. And there is a whole ecosystem. In other words, Applied Digital, as an example, a company called Applied Digital, owns and operates and builds data centers. CoreWeave, which was an IPO a lot of people talked about in 2025, has turned AI into a service. So you don't have to go out and buy a whole system. You can just rent AI capacity from CoreWeave, and they have their capacity in Applied data centers, which of course are powered by NVIDIA chips, Marvell Technologies chips. Sterling Infrastructure builds the data centers. GE Vernova powers them by converting natural gas into electricity on site with generators. So there's a whole ecosystem. Data centers are just part of it, but artificial intelligence is changing the way businesses operate. I think it's why profits are at a near record. We're just starting to see the returns. It's early days on AI, and again, that's driving profitability across the S&P 500.
Another market positive and also an economic positive, in particular from a housing perspective, would be if we get further interest rate cuts. We are going to be getting a new Fed chairman in 2026. You know, we're down to 4 candidates.
A Trump pick, which means rates will probably go lower.
I was going to say, I wanted to get kind of your take on that. I think the market right now is really kind of betting on that first cut not being until April. Fair enough with Powell's term ending. But monetary policy and also employment, 2 big things that you're going to be watching, obviously.
Oh, for sure. Well, the Fed has, they call it the dual mandate. Price stability is one, full employment is the other. And we have seen an uptick in unemployment to 4.6%. Maybe that's because of AI, right? AI replacing some of the jobs. So I think the Fed has all the cover it needs to continue cutting rates. And that is just a huge shot in the arm for the economy. I mean, for borrowers, whether you're trying to get a mortgage, whether it's a home equity line, whether you are buying a new car, whether it's businesses that need money. And the other thing that people don't really talk about, but what someone like me, a money manager and a stock picker, looks at is how interest rates impact future earnings. As rates go down, future earnings are worth more. So you're willing to pay more for stocks, and that's very powerful. So, yeah, I think we are going to see lower rates. And quite frankly, politically, I think that probably is something we need to see because Republicans have an affordability issue, right? Everyone's been talking, especially the Democrats, about affordability. And we're just starting to see the benefits of the big, beautiful bill take hold. We're seeing companies spend 15% more on capital equipment than they have over the past 5 years on average, again, because they can now have accelerated depreciation thanks to the big, beautiful bill. So all that will start to percolate, and it needs to with midterms coming up because imagine what would happen if we actually had a blue wave and it switched. Market would not like that, nor would those of us who have voted for a certain Donald Trump.
Adam Johnson, it's always great to see you. Thank you so much for being with me. I really appreciate it.
Thank you, Cheryl.
Last show of the 2024.